Hey guys, Brad here, and I want to talk to you about changes in the tax law from the Build Back Better bill. I think whatever, Big Beautiful Bill. No, Big Beautiful Bill. That's it. Um, Changes in that law that was just passed, okay, and how they're going to impact you. Okay, so to start with, the tax bracket changes. So not really changes. Okay, it's in 2016, the Tax Cut and Jobs Act changed tax rates and tax brackets, and those are made permanent. Okay, they were going to sunset in 2006 and go back to what they were previously, which were higher rates. All right, those are made permanent. Permanent's kind of a funny word when it comes to taxes, but at least for the time being, they're permanent till they change it again. Also, standard deduction, I've got that up here. The standard deduction changed slightly. So individual went from 15,000 to 15,750. Married filing joint went from 30,000 to 31,500. Okay, and that takes effect this year. Now, other changes, bigger changes that are going to impact you, going to impact federal employees. Let's look at them. First one, this is probably the biggest one. If in the year that you turn age 65, you're going to get, we just talked about those deductions, for single 15,750, married 31,500. So you're going to get an additional $6,000 per person. Okay, so if you're single, that standard deduction goes from 15,750 up to 21,750. Your married filing joint, 31,500 goes up by another $12,000. All right, and that is temporary, going through 2028. Okay, so a number of these things are temporary, ending in 2028. There's some things that take effect in 2026. We continue to make tax law more complicated, which I don't understand, but that's what we do. So impact on you, what's that mean? Okay, also we have phase outs here. So this additional $6,000, that starts to phase out at $75,000 for single people, to where it's all the way phased out at $175,000. Okay, and it's a pretty linear phase out. All right, to where the more money you make, the more it goes down until it's eventually gone at $175,000. Okay, it's phased out for married filing joint at $150,000 is where it starts to phase out, all the way up to $250,000. Okay, and these numbers are MAGI, or modified adjustment gross income, modified adjusted gross, but basically it's going to be adjusted gross income for 99% of people. Okay, the only other thing that's deducted, I believe, is foreign interest, which people rarely have. So 100 starts to get phased out, 75 for single, 150,000 for married. So what kind of impact is that going to have on you? It's going to have an impact of anywhere from $1,000 to $2,640. So if that whole $12,000 is in the 22% tax bracket, okay, it could save you an additional $2,640 in a year. So it's going to add up to more money in your pocket, anywhere from $500, $1,000 to $2,640. Okay. So that's help. I work with retirees, so that's going to help a lot of you. Another one, charitable donation. Okay, with standard deduction. If you itemize, you can deduct contributions to charities. Okay, you've always been able to do that if you itemize, but since the standard deduction was increased with the Tax Cut and Jobs Act, not very many people do that, okay? But with this, it increases the charitable donation, okay, if you're taking the standard deduction up to $1,000 per person, okay? So if you're single, you can deduct $1,000 of charitable contributions. If you're married filing joint, you can deduct $2,000. All right. And I like that. I like the incentive to be able to get that deduction for giving to charities. So that's another thing that could impact a lot of you. Here's another one, okay? And I'm not sure how many this is going to impact, but but it will impact a few. Increases to the SALT deduction. Okay, SALT is your state and local taxes. All right. So the two biggest things that you can deduct there are your state income taxes and then real estate taxes. All right. Those are the two biggest things that are deducted there. So if you live in a lovely state like I do of Illinois, where they have, I believe we're rated the second highest in property taxes, where $400,000 house, you're paying around $10,000 a year in real estate taxes. Okay, so you can easily be above that just in real estate taxes. And then we've got 5% state income taxes. So say you're paying $10,000 state income taxes, $15,000 real estate taxes, that's $25,000. Previously, you could only deduct $10,000 there, okay? So now, and this is going to be especially applicable to those, married couples where both are working, or maybe both higher compensated federal employees. If it gets you up close to that standard deduction, and then you have charitable contributions of, say you had that $25,000 plus you have $10,000 of charitable contributions. Okay, now you're up to $35,000. You're over that $31,500 standard deduction. Okay, so that can help some of you. That is also phased out. This is not going to affect many of you that I work with, but that is phased out. Individual or married, phased out at $500,000. Okay. What else? We've got overtime, all right? And this is going to affect some federal employees. So overtime now has an exemption of $12,500 or $25,000 for married. And that is so you're not paying taxes on that $12,500 as an individual, or $25,000 if you're married. That is starts to phase out at $150,000. Okay, and then $300,000 for married filing joint. So that will impact some federal employees, maybe some at the VA, nurses, people like that. And then just a couple of smaller things. So we've got deduction on car loan interest. So you can now deduct some interest on your car loans. I believe there's some other details with this, but again, it goes through 2028. And it's phased out at lower income levels, 100,000 single, 200,000 married. And something else I thought was worth mentioning, the exclusion on tips. Okay, this is an exclusion of $25,000 per person, and it goes through 2028. It is phased out at 150,000 single or 300,000 married. And there's a few other things, smaller things. But these are the biggest ones that I found they're going to impact the people I work with, federal employees, federal retirees, with this being the biggest one. And then, these two having an impact as well. So I hope this helps. I hope that this gives you an idea of how it's going to impact you. It should not impact anybody negatively. We also avoided cuts to federal benefits, so that's great. But what is going to happen here is you are going to have a little bit more money in your pocket. So if you're doing your calculations as far as tax withholding, stuff like that for the year, you've got some changes that are going to impact that. Okay? Keep in mind, this is not specific advice, just going through general retirement planning advice here for you guys. I hope it helps. If you liked it, click the like button, share it, subscribe, and if you need some help, there's a link in the comments where you can schedule a call. Thanks.